Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another trading day, which is Casual Friday Retail Trading Team. I'm Mastro, and this is your routine briefing. So we are going to jump right in today, as we always like to do here, and talk about what's going on. So I'm focused on ES today. I should probably transition my screen so you can see my screen. There we go. I'm focused on ES today. NASDAQ yesterday made me a little bit grumpy. I got stop run on my trending trades twice. So I'm going to focus on ES today just so I don't try to take out my frustration of not making what I thought I should have made yesterday in the NASDAQ. So that is why we're looking at ES. No really other good reason. I am going to check a couple things this weekend between ES and the NASDAQ, yet Occam, which is that NASDAQ strategy, is still kind of the top performer that I have in my arsenal. I'm focusing on R3 today again, just so I don't tilt. So that is why we're just going to be looking at ES. You can see the mechanics and all the other goodness in the description of this video if you are so interested in that. And yeah, so let's jump right into it. We got about 2 minutes until the market opens. I want to get the newsletter with all this packaged up nicely out to you right when we open there. So let's talk about a little bit what's going on. Really today, it's very simple. It's a nice, simple day, my opinion. I'm just focused on this 15-minute chart. In fact, we're going to zoom in a little bit and talk about exactly what I'm focused on. So for me, this 45.30 to 45.60 area is all chop. I'm not even going to take a trade in this area, so it's possible I don't even take a trade today. I just am not interested in anything, especially really 45.40 to 45.55-ish. And really I'm extending that to 45.30, 45.60. So really expecting chop for there. Yet if we do pop down to that first cyan line there, and we do have a reclaim, I know that would be crazy to see a 20-point sell-off in the SPOOs. Yet that is where I would take one of those R3 trades again. If I am referring to anything then you don't know what the acronym means or whatever, just go ahead and pop into that description section here of this video and go to the routine day trading document. You'll see what I'm talking about. So I'm all R3 today. I'm going to see if I can't blend Occam and R3 a little bit this weekend, because again, a little bit of frustration in the NASDAQ yesterday, just with those stop runs, got suckered out. So anyways, but that's what I'm talking about here. So yeah, really just focused on 45.30 to 45.60, and when I say I'm focused on not trading it, and I'm looking for, like I said, that first cyan down there, and really the second if we want to get really excited and pop down to this 44.90 to 4500 area. I think there's a potential short breakdown trade if we lose this 45.25-ish area, yet I'm personally not going to be shorting anything unless we pop up to, you see where this pink line is here at 45.70, which is slightly beyond the expected move, and I think that does offer a nice short opportunity. So that is really what I'm looking at. Simple levels today, I think, and you can see the image that I'm going to put this image. Here we go with the bell. Very good. So there's the bell. Those are your levels. Just one more thing I want to show you, a couple more things. We'll just look at it real quick here. So first being this big gap here, 44, 443, 44, 43, is that however you're supposed to say that, is the gap level. 44.45 might see a rebid there first, so definitely watching this area very closely. And then on the weekly chart again, it's important to keep everything in perspective. If you go to that warm-up document as well, you'll see what I'm talking about when I talk about imbalance and being outside of value. We did have value move just up just a scotch here, as my friend Tim Knight would say. So you see we're kind of a little bit above 430 now. Yeah, we are in a state of imbalance. We are above all trend lines. I got to move this line up here. We made a new high yesterday. And the bulls have complete control. So that's why I'm not really interested in dip buying. That's why I'm going to be really picky to end the week here. And that's what I'm looking at when I say imbalance. It's very clear that we have a lot of control in the hands of the bulls right now. And the only really downside magnet is going to be this 443 to 445 area. Yet we got a long way to go before getting there. So one final component is going to be volatility here. So we had a bit of a free fall yesterday. We did get a little bit more of a bid. We are now testing this downward sloping trend line again. I'll go ahead and draw another while we're hanging out here. Something like that. So I'm going to be watching that for that time and volume above the 16 area and what happens if and when we do test this trend line. Obviously, as long as we're below this, there is absolutely no fear in the market, and we may see a little bit start to creep in if we can build some time and volume above 16, and I really want to see us start breaking beyond this trend line. So volatility is still not really relevant, but it's trying to peek its head back into the relevant cave, if that is a fine analogy. That is what I'll be looking at. So again, I'm going to package everything in a newsletter for you, and we are going to get that sent out right away. So let's take one look, see what we got going on for the open here. I'm expecting, if I had to make a guess, probably an overnight high trap. Again, I'm not trading it. Yesterday and the day before, I got caught trying to play those, and even when I caught the trend, didn't really, let's say, it ended green, but not as green as it should have been. It's been a really great week of opportunity, a really great case study and technical analysis. Yet we can talk about that another time. So if you're not subscribed to the newsletter, I encourage you to go to retailtrading.com and hit that subscription button. Everything, like I said, is packaged up real nicely there, and I give my major points, so it's nice and summarized, and the levels are also clear. And you can also find those levels in the warm-up document, which is dynamic, stays updated throughout the day, and I will keep everybody posted on Twitter as well. So if you did find this information useful, if you are even watching these videos, please give it a like. That helps the YouTube algorithm and our quest to get back to double-digit views here. That is the first initial goal of the routine trader, so I'd appreciate any like that you can give there. So also appreciate any engagement, like I said, on Twitter at routine trader or in the comment section here. I did get my first spam post the other day, so that was pretty exciting. Did have to hit the delete button just because we don't want to encourage any of that, but always looking for that engagement, and it's always appreciated, just like I always appreciate your attention, and hope that you stay classy until Monday.